If you're thinking of buying a home in Anne Arundel and Howard County, but you're not quite sure what's required, this video is for you. I'm going to list everything you need to buy a home in Anne Arundel and Howard County. And at the end of this video, you'll have actionable steps to take. Hey, my name is Claude Shacklett, and I'm your local realtor with Keller Williams Flagship of Maryland. And I specialize in helping home buyers in Anne Arundel and Howard County buy their ideal homes for a reasonable price, so they can move into a better home and improve their quality of life without having to worry about a thing. And in today's video, I'm going to talk about what's required for a new home buyer to find and buy a home in Anne Arundel and Howard County. Before I get into the video, I want to share a story about a past client who had a terrible experience buying their first home. They didn't hire an expert local realtor to help them along their journey, and they didn't fully understand all of the steps required to buy a home. So the process was difficult and confusing, and it left them paying more for their home, at least a higher interest rate. If they followed the steps I'm about to share with you today, they could have saved thousands of dollars. I guide my clients through the entire process, making everything fun and easy. The moral of the story is you should work with a local expert realtor who can guide you through the process of buying your dream home for a reasonable price. All right, let's get into it. Here are the steps you need to buy a home. Save for a down payment and other expenses. The first thing you need to do before even thinking about buying a home is to save for a down payment. What's a down payment? A down payment is money you save for your first home. Now, the general rule is the more money you save for your down payment, the easier it will be for you to get a mortgage. Okay, so how much do you need to save for a down payment? In Anne Arundel and Howard County, you want to save anywhere between 5 to 20% for your down payment. An incentive for putting down a larger down payment is not having to worry about paying mortgage insurance. This is a fee you have to pay to protect your lender when your down payment is less than 20%. Mortgage insurance is typically required for FHA and USDA mortgages, so try to aim for 20% down. Save for closing costs. Closing costs can slip under the radar for many first-time home buyers. You will need to save an additional 1.5 to 5% on top of your selling price to cover these closing costs. Closing costs are legal and administrative fees associated with buying a property. The reason you want to save for these additional costs is so your lender's pre-approval rating doesn't change. If you were pre-approved based on saving a certain amount for your down payment, but use some of this cash to cover closing costs, you are now left with less money than you initially had. Closing costs may include legal fees paid to a title company for organizing your documents. Title insurance. This is a fee your lender may require to protect them in case ownership of the home comes into dispute. Mortgage insurance. This is usually not necessary if your down payment is 20% or higher. You will also pay taxes on new home purchases. This can be a very large additional fee, so it's important to save for it accordingly. Home inspections. These are not mandatory, but they are highly recommended as they can reveal underlying problems with the house. There are more payments that arise, which you need to pay for during the closing process. This includes property taxes and utility bills. Save an additional 1.5 to 5% of the sales price to pay for these. Prepare your finances after saving your down payment and putting aside a good amount of money for closing costs. The next step is to get your finances in order and start talking to lenders. The first thing you'll want to do is check your credit score. There are a variety of websites to help you determine your credit rating for free without affecting it. Credit ratings fall on a scale from 300 to 850. And generally speaking, the lower you are on that scale, the worse your chances of getting a loan are. Checking your credit is extremely important. If your credit score is low, take the opportunity to improve it before applying for a mortgage. Building your credit score is outside the scope of this video, but one way to improve it is to make sure you don't carry carry a balance on any of your credit cards. Once your credit score is above average, the next step is getting documents in order. Your lender wants to know about your assets, income, and debt. With these items, they can determine how safe it is to give you a loan, how much money they will loan you, and what interest rate to charge. Have the following documents ready and in order before speaking to a loan officer: your driver's license or government-issued ID, pay stubs, W-2s, tax returns, bank statements, or any documents you can provide proving your employment. This is important if you're self-employed, because the lender will really want to make sure your income is stable and reliable before giving you a loan. Proof of your down payment. This means bank statements and account balances. Also, if a friend or relative contributes to your down payment, you will need a letter from them confirming the intention of this transfer. Information about other assets you may have. This includes receipts for items you own supporting your case for your value of your assets. The last thing you need is any information regarding money you borrowed. For example, credit card balances, car loans, leases, lines of credit from banks, student loans, and any other financial obligations, including spousal or child support payments. Getting mortgage pre-approval. The next step is to speak with a lender about getting pre-approval for your loan. I recommend getting quotes from 3 different lenders before locking in. This will let you compare interest rates between lenders. Getting pre-approval is an important step in purchasing a home. Depending on the lender, it allows you to know how much money you can borrow and how much money you'll pay in monthly mortgage fees. You can even lock in an interest rate for 60 to 120 days while shopping for your home. Start house hunting. Once you have your down payment, along with a closing cost fund in the bank, and you've received pre-approval from your lender, you can start searching for your dream home. There are a few ways you can do this. You can start looking on listing websites, or you can reach out to your local realtor, and they will help you find exactly what you're looking for. There are many advantages to working with a realtor, including accessing off-market properties. I recommend interviewing a few agents before making your decision. This ensures your agent keeps your best interest in mind. Now, if you're interested in buying a property in Anne Arundel or Howard County, I can help you find a property you'll fall in love with. I have a large network of exclusive properties in the area, and I'd love to put you in touch with a seller that suits your needs. So if that's what you want, my email is GetShackdUp@ClaudeShacklettRealtor.com. My phone number is 240-444-3271. You can also DM me on Facebook. Just search Claude Shacklett. Or you can DM me on Instagram. My username is @GetShackdUp. And even if you're not looking to buy or sell a home right now, but you want to learn more about the market, the process, and other mistakes to avoid and best practices to do, subscribe to my YouTube channel, because I create lots of educational content, and click on the bell icon so you can get notified when a new video comes out. Or again, just reach out. I love helping people. I love real estate. And thank you for watching.